Hey, crypto warriors, welcome back to Bony's Life. I'm your host, Bony, and if you're watching this on July 28th, 2025, you're about to witness what could be one of the most pivotal 24 hours in Bitcoin's recent history. We're sitting at $119,442, just a whisper away from that psychological $120,000 barrier, and the market is absolutely electric with anticipation. Now, before we dive into the technical wizardry and trading strategies that could make or break your portfolio in the next day, let me ask you something. How many of you predicted we'd be having this conversation with Bitcoin knocking on $120,000 door while institutional giants like JP Morgan are literally planning to lend against your Bitcoin holdings? If you did, you're either a time traveler or you've been paying very close attention to the seismic shifts happening in our space. The past 24 hours have been nothing short of extraordinary, and I'm not just talking about price action. We've witnessed a fundamental transformation in how traditional finance views cryptocurrency, and frankly, it's about time. But here's the thing that separates successful traders from the crowd. While everyone else is celebrating the headlines, we're analyzing the data, identifying the triggers, and positioning ourselves for what comes next. Let's start with the big picture, because context is everything in trading. The total cryptocurrency market capitalization now stands at $3.96 trillion, up 1.82% in just the last 24 hours. That's not just a number, folks. That's nearly $70 billion in fresh capital flowing into our ecosystem in a single day. Bitcoin's dominance is starting to slide, which historically signals the beginning of altcoin season, but we'll get to that strategy later. The catalyst for today's surge? The United States and China agreed to further delay the introduction of reciprocal trade tariffs. Now, you might be thinking, Bony, what does trade policy have to do with my Bitcoin bag? Everything, my friend. Risk-on sentiment in traditional markets creates a rising tide that lifts all boats, and Bitcoin, despite what the maximalists say, still correlates with global risk appetite during major macro events. But the real game changer isn't today's price action, it's the regulatory clarity we've achieved. The Genius Act, signed into law on July 18th, represents the first major cryptocurrency legislation in U.S. history. Alongside the Clarity Act and the Anti-CBDC Act, we now have a comprehensive framework that's transforming how institutions approach digital assets. This isn't just regulatory theater, this is the foundation for the next phase of crypto adoption. Speaking of adoption, let me blow your mind with some numbers. 35 publicly traded companies now hold at least 1,000 Bitcoin each. That's up from just 24 companies at the end of Q1. We're talking about over $116 billion in corporate Bitcoin holdings, and the buying isn't slowing down. In fact, corporate Bitcoin purchases increased 35% quarter on quarter, from 99,857 BTC in Q1 to 134,456 BTC in Q2. And then there's Michael Saylor, the man who literally bet his company on Bitcoin and won. His latest price prediction, $21 million per Bitcoin by 2046. Now, before you start calculating your retirement plans, let's break this down. That represents a 175-fold gain from current levels, translating to a 27.9% compound annual growth rate over 21 years. Ambitious? Absolutely. Impossible? Well, MicroStrategy's 607,770 Bitcoin holdings, worth $73 billion, suggests Saylor is putting his money where his mouth is. But here's where it gets really interesting. Jamie Dimon, the CEO who once called Bitcoin a fraud, is now exploring crypto-backed loans. JP Morgan is reportedly planning to lend against Bitcoin and Ethereum holdings as early as 2026. The same institution that would have fired employees for trading Bitcoin is now building infrastructure to serve crypto-wealthy clients. If that's not a capitulation signal, I don't know what is. Now let's get into the technical analysis, because this is where we separate the traders from the hodlers. Bitcoin is currently testing a critical resistance zone between $119,500 and $120,000. According to Ted Pillows, a respected crypto investor, Bitcoin needs to break above $119,500 for a significant move higher. If that doesn't happen, we're likely to see continued consolidation. Looking at our Fibonacci retracement levels from the recent high of $120,000 $123,000 to the low of $113,800, Bitcoin is currently sitting right at the 38.2% retracement level of $119,486. This is textbook technical analysis, folks. The 38.2% level often acts as a launching pad for the next leg higher, but it can also serve as resistance if momentum wanes. Our estimated RSI is sitting at 54.5, which is right in the neutral zone. This suggests there's room for movement in either direction without being overbought or oversold. However, the real story is in the volume. Bitcoin open interest in futures markets remains elevated above $45 billion, just shy of historical peaks. This indicates continued institutional engagement and speculative leverage. Here's where it gets spicy. CoinGlass data shows the max pain level for Bitcoin shorts at around $119,650. If Bitcoin manages to challenge its all-time high near $123,000, we're looking at over $1.1 billion in short liquidations. That's not just a number, that's rocket fuel for a parabolic move. So, what's our 24-hour trading playbook? I've identified 3 primary strategies based on current market conditions. First, the breakout strategy. If Bitcoin breaks above $119,500 with volume, we're targeting $120,000 with a stop loss at $118,442. The risk-reward ratio isn't fantastic at 0.47, but the probability of success is high, given the institutional buying pressure. Second, the support bounce strategy. If we see a retest of the $114,500 support level, that's a high probability long entry targeting a return to current levels around $119,442. With a stop loss at $113,800, this gives us an excellent risk-reward ratio of 7.06. This is my preferred strategy for conservative traders. Third, for the range traders among us, we're looking at buying opportunities around $115,000 and selling opportunities around $119,000. This strategy works well in consolidating markets but requires tight risk management with stops at $113,800 for longs and $120,000 for shorts. But Bitcoin isn't the only game in town. Ethereum is showing impressive strength at $3,912, up 3.59% in the last 24 hours. We're 56% through the range between support at $3,800 and resistance at $4,000. A break above $4,000 could target $4,200 quickly, especially with BlackRock's Ethereum ETF becoming the third fastest ETF to reach $10 billion in assets. The real star of the show today is Binance Coin, up 6.58% and sitting at $851.58. This is the strongest performer among major cryptocurrencies, and with support at $800, we could see a push toward $900 if the momentum continues. BNB often leads during bull market phases, so this strength is particularly encouraging for the broader market. Now here's something that might surprise you. Peter Schiff, the gold bug who's been Bitcoin's biggest critic, is actually urging Ethereum holders to swap for Bitcoin. His analysis of the ETH-BTC ratio, currently at 0.031 near the lower end of its 5-year range, suggests Bitcoin has more upside potential in the short term. When your biggest critic starts giving trading advice in your favor, you know something fundamental has shifted. Raoul Pal, the macro investor and former Goldman Sachs executive, is even more bullish. He's predicting what he calls Banana Zone Phase 3 will take Bitcoin straight to $500,000. His advice? Load up before August 2025? Now, I'm not saying you should mortgage your house based on one person's prediction, but when someone with Pal's track record speaks, smart money listens. The institutional adoption story continues to unfold in ways that would have seemed impossible just a few years ago. BlackRock's Bitcoin ETF is now generating more annual fee revenue than their S&P 500 fund, pulling in over $187 million. Cathie Wood's ARK Invest has made a major equity investment in Bitmine Immersion Technologies, acquiring nearly 4.8 million shares worth $116 million. Even the banking regulators are getting with the program. The OCC, Federal Reserve, and FDIC issued joint guidance on crypto custody risk management principles. 6 major crypto firms, including Ripple, Circle, and Fidelity, are racing for U.S. bank charters. This isn't just adoption, this is integration into the core of the financial system. Our market sentiment indicators are painting a picture of controlled optimism. The estimated fear and greed index is sitting at 75, firmly in greed territory but not at extreme levels. This suggests there's still room for upward movement before we hit euphoric levels that typically mark local tops. So, what are the specific technical triggers to watch in the next 24 hours? First, a Bitcoin break above $119,500 with volume confirmation targeting $120,000 and potentially higher. Second, Ethereum breaking above $4,000 could trigger a move to $4,200. Third, continued BNB strength targeting $900. Fourth, any volume spike above recent averages would confirm breakout momentum. And fifth, watch for RSI divergence, which could signal potential reversal points. Now let's talk risk management because this is where most traders fail. Never risk more than 2% of your portfolio on any single trade. With the volatility we're seeing, position sizing is crucial. If you're trading the breakout strategy, calculate your position size based on the distance to your stop loss. If you're swing trading the support bounce, you can afford slightly larger positions due to the better risk-reward ratio. Remember, we're not trading in a vacuum. Global macro factors continue to influence crypto markets. The delayed US-China tariffs are positive for risk assets. The Federal Reserve's stance on interest rates remains accommodative for alternative assets. And the ongoing currency debasement, concerns that drove institutional adoption in the first place, haven't disappeared. For those looking beyond Bitcoin and Ethereum, keep an eye on Solana at $194.11, up 3.64%. The upcoming Fire Dancer upgrade could provide additional catalysts. XRP at $3.29 is showing resilience despite recent volatility, with analysts calling the recent dip a healthy correction. And don't sleep on Cardano at 0.8469, which has been quietly building strength. The DeFi space is also evolving rapidly. Treasury Secretary Scott Bessent expects the stablecoin market to grow tenfold from $200 billion to $2 trillion over the next few years. This massive expansion will require infrastructure, creating opportunities across the DeFi ecosystem. However, JP Morgan analysts have called this forecast hard to believe, so manage expectations accordingly. Let me share something crucial about trading psychology. The market is designed to separate you from your money through emotional decision-making. When Bitcoin breaks $120,000, and I believe it will, the FOMO will be intense. When it pulls back to retest support, the fear will be equally powerful. Successful traders have predetermined plans and stick to them regardless of emotional impulses. For portfolio allocation, consider a barbell approach. Keep 70 to 80% in established cryptocurrencies like Bitcoin and Ethereum, 15 to 20% in promising altcoins with strong fundamentals, and 5 to 10% in higher risk, higher reward plays. This approach allows you to participate in the upside while managing downside risk. Looking ahead, several catalysts could drive the next phase of this bull market. The potential creation of a strategic Bitcoin reserve by the US government, continued institutional adoption, the ongoing development of Bitcoin Layer 2 solutions, and the maturation of the Ethereum ecosystem all provide fundamental support for higher prices. Before we wrap up, I want to hear from you. What's your take on the current market setup? Are you positioned for the breakout, or are you waiting for a pullback? Drop your thoughts in the comments below, and don't forget to smash that like button if this analysis helped clarify your trading strategy. Your engagement helps the YouTube algorithm show this content to more traders who need to see it. If you're not already subscribed to Bony's Life, what are you waiting for? We're building the most informed crypto trading community on YouTube, and I don't want you to miss a single episode. Hit that subscribe button and ring the notification bell so you're always first to know when market-moving analysis drops. As we close out this episode, Bitcoin is holding strong above $119,000. Institutional adoption continues to accelerate, and the regulatory environment has never been more favorable. The next 24 hours could very well determine whether we see a breakout to new highs or a consolidation phase that sets up an even bigger move later. Remember, this is not financial advice. I'm sharing my analysis and trading strategies for educational purposes. Cryptocurrency trading involves substantial risk, and you should never invest more than you can afford to lose. Always do your own research and consider consulting with a qualified financial advisor. That's a wrap on today's episode of Bony's Life. I'll be back tomorrow with a full breakdown of how these trades played out and what's next for the crypto markets. Until then, trade smart, manage your risk, and remember, in crypto, fortune favors the prepared mind. Peace out, crypto warriors. This is Bony, and I'll see you in the next one.